All right. Welcome back to another week of Trading Prep with the Trading Triangle. I'm your host, Trader Nate, and I've got with me, as always, Sean Clark and Kay. Kay, how are you doing today?
I'm doing great, guys. How are you doing? Happy Sunday.
Happy Sunday, sir. And Sean, how about yourself? Doing well?
Yeah, good. It's actually getting warmer here in the UK, so I'm very, very much looking forward to that. So yeah, looking forward.
I got the opposite sentiment here in the desert. I'm like, it's getting warmer. Good stuff. Yeah, we got a lot of interesting charts to get to. Earnings week is kicking off here, we're getting into earnings season, I should say, not earnings week necessarily. And got a lot of good stuff to talk about. But before we do, real quick disclosure up front. Of course, this is not intended for financial advice, nor should it be taken that way. We're not professionals or anything along those lines. We are just three traders having a good time talking about our trades, and hopefully it provides some entertainment and educational value for you. So thanks for tuning in, whether you're tuning in on the Trading Triangle on YouTube or through our live stream at Trader Nate here on X or on Wolf Financial on either of those platforms as well. So appreciate you guys tuning in. Make sure you subscribe. By the way, I'll drop that in real quick to the Trading Triangle on YouTube. Smash that like button. And yeah, we will get right into it. What do you think, guys?
Let's do it.
I will say, we're gonna you might beat me to it there, Kay. I was gonna say we are gonna have a guest on at the end. By the way, we'll have Will from GraniteShares joining us. So that'll be really interesting conversation. We'll have that at the top of the hour, and of course, as always, get your requests in so we can take some ticker requests at the end of the show. And yeah, I think that's everything. Did I miss anything, Kay?
No, we're good. Let's do this.
I love it. All right, let's get into these. Last week's overview, got some red, got some green. It was an interesting week. Volatility ticked up quite a bit, which we'll look at. Any names jump off the page to you, Sean?
No, not really. Apple doing quite well, actually, up 4%. I think that's quite impressive, considering obviously the rest of the market throughout. But you can see there's a lot of red there, isn't there? Perhaps the kind of smaller size caps being hit a bit more from what I can see here. But yeah, nothing really jumping off the page apart from Apple.
Anything stand out to you, Kay?
No, pretty similar to what Sean's feeling. I think the Friday was a real dump that we had in the market. But pretty much, it was kind of expected.
So the thing that stood out to me was banks are all red. We had banks starting to report earnings Friday. I was hoping that there would be some buying leading into it and banks maybe helping continue to power higher instead of having a red week. So more bank earnings this coming week. We'll have to see how that continues. But yeah, that's the heat map for last week. And the performance. So like I said, VIX volatility, VIX over 18. I don't remember the last time we saw that.
It's long time back. Yeah, we used to be in 13 and then 16 and then we are now 18.
Yeah, exactly. So 1850 used to be the low water mark, and now it seems like that was a long time ago. So that is notable, I think. Put to call at 0.83. Any thoughts on that in particular, Kay?
No, I think we are ticking up slowly. We used to be 0.7, then 7.1, 7.2, 7.3. Now we are coming to 0.8. You can see in the fear and greed as well. I mean, used to be closing to the extreme greed. Now we are actually getting into the fear territory. We are almost touching the fear in like couple points.
Yeah, and look at all this red. I mean, small caps did not do what you wanted them to do, right? I mean, I keep talking about them like, come on, let's get there, and completely sold off. So it was a tough week. SPY, QQQ, diamonds all down. Q's actually basically flat relative to everything else, and then Bitcoin giving it up and continued to over the weekend a bit. So, Sean, we're squarely in neutral category. That was a big drop from last week or the week prior, I think. What are your thoughts around last week's performance? Anything to add?
Yeah, I mean, quite natural reaction from CPI, I think, wasn't it? Got a big drop, and it continued to do so on Friday after a little bit of a hope on Thursday. But I think we're about to look at SPY and QQQ. We're reaching those kind of key levels for both of them in terms of the moving averages. So it'd be interesting to see your guys' thoughts on that. Just also on the key events page we've got this week, we've got jobless claims. And we've also got Jerome Powell speaking on Tuesday, which I forgot to put in there. Right. So if you are trading on Tuesday, do be aware of what time you're trading, because you know what he's like.
He's what, like 2 p.m., right? That's when he will speak, I believe, 2 p.m.
Your time, yeah.
Yeah, so that's a good note there too. Jay Powell talking, he does like to move markets and slip in little lines that we all react to. But yeah, it was definitely a down, obviously a very down week, a pullback week. But when we look at the charts, I think from a longer term perspective, it might give you a little bit of different look. But before we get to that, I mentioned earnings. We are starting to ramp back up. More banks. I've got a couple charts from earnings this week and some more noble names. Kay, I know you do too. Anything you're looking at in particular, Kay, though, outside of what you have this week, actually? Netflix
And SLB. I think I'm also looking at the TSMC and ASML, mostly in the semiconductor space.
yeah.
From a bank standpoint, I think we have a couple banks on Monday. I think we have Goldman Sachs, you have M&T, you have Charles Schwab, and then we go on Friday with American Express. I think those are real key bank players over here as well.
Yeah, I got that American Express for sure. I'm taking advantage of being able to talk about that chart. What about you, Sean?
For me, Netflix is probably the main one. I mean, obviously the banks as well, but not too up to that. Not really bothered about that. But Netflix, obviously the first one of the tech, really the big tech at least. See if they can continue their amazing recovery since COVID. Obviously the chart looks pretty good, and we'll get into that a little bit later on.
Nice. Yeah, definitely looking at semiconductors as well. You mentioned that, K, and TSM, probably most interested in. But yeah, here we go again. We're going to see if earnings start actually moving the markets. We'll get some bigger names in the coming weeks, and this is going to get us nice and warmed up. Should have some good opportunities. And looking at SPY, like we always do to kick things off charts-wise. And by the way, guys, keep those ticker requests coming in. I do see we got RIVN, one of the first names dropped, so we'll take a look at that later. Note that, Sean. So, okay, for SPY, we got a little bit of additional selling going on, right? This is multiple weeks, and pulled back, broke the 20-day moving average significantly, and for the first time in quite a long time, right? I mean, that hasn't happened since the start of the year, start of the year.
Yeah, you're right. Start on 1.5, we had the first dip below the 20-day moving average.
But that was quickly bought up, right? Yeah. And then another dip was quickly bought. It was like a single day, and then back above.
Exactly.
And so here we've got 3 candles below. Now we're testing the 50-day moving average. So I think that's notable. I did pull in the 150-day moving average, which you guys know I like. Just as another additional reference point lower, I don't know that we're looking at that much of a pullback, because if you look at this, right, it's still basically sideways action despite, making a lower low, which is not great. What would you add here, Sean?
Yeah, we just touched on it there, kind of sideways action. Not much has really changed if you just go back about a month or so, maybe even less than that. So we did a bit more of a significant move downwards if we are to kind of, think a bit more bearishly. But I'm still very much in the bullish camp just because of this price action kind of going up. Trend is your friend. Yes, we've broken the 20 moving average, but the 50 is still well intact, at least for now. But yeah, I mean, I'm glad you've zoomed out on this chart because you can just really see the move that the SPY has really made. And in terms of comparison of where we are now, kind of pulling back a little bit, it doesn't look like it's kind of harming it so much at the moment. But yeah, looking at kind of 500 psychological, if we do break it, and that'll probably be my adding point, if that makes sense. So yeah.
Yeah, I like that. How about you, Kay?
I think so. From my perspective, I think there are two key things that are happening. One is, of course, the market is waiting for the earnings season to kick it off, especially with big tech coming up, starting with this week, next week, and so on. So we'll get that. And the second is a geopolitical situation that is, unfolding with Iran and Israel. So how that plays out, nobody can predict. That will, of course, have some impact, if not major impact, at least some impact you'll feel in the short term. But I think the earnings season is really going to be the main driver here.
Yeah, you're right. The news over the weekend and how markets react at the open will be interesting. We'll get the open a little bit later today in the futures market, and we'll get a little bit of a sense maybe. I think that all that news and everything going on in the world is worth letting markets digest early on Monday, for what that's worth, before you get a little aggressive in either direction. But keeping it rolling, looking at the Qs, I mean, this really is consolidation, right? Kay, you like to call it barcoding, and that's what we've got going on with the Qs, right? All the big tech names. This is the daily candles. I did stick with the daily, and I mean, sideways action. We did get the 50-day pulled up nicely and providing some support there. I think that's some positive signs you could look at there, kind of like higher lows and holding that 50. You see that as well, Sean?
Yeah, I do. Yeah, 100%. I think we're building quite a nice big volume bar as well, kind of where we are at the moment. So that's going to be another kind of confluential point going forward. But yeah, until it breaks either way, I'm not really looking at the Qs. Well, I'm looking at the Qs obviously daily, but for a trade wise, probably not at the moment.
Yeah, just holding off to see which way we go.
Yeah.
How about UK?
Yeah, I mean, same sentiments, and I think more than SPY, I think QQQ is really driven by the tech. So all the main tech companies that are going to report earnings, starting with Netflix, most likely in following week will be Tesla, Microsoft, Meta, all those big names that drive the market. I think that is going to set the tone for the couple coming weeks, I would say.
Yeah, I think maybe even trading some of these big names would be pretty interesting. I've got 434.75 at the low end of the range and 446.58 at the top end of the range for the Qs. I'm basically waiting either to, I look at this two ways, right? You can either trade the range and wait for a rejection or bounce on either end, and then trade accordingly, or wait for that breakout on either direction and wait. I would wait for a retest or a second candle to confirm, the directional move after that break. So those are the things I'm really looking for. I will say if it breaks lower, I will be more inclined to go short with a heavier position maybe than I would be to go too heavy long, just because of this extended move. I would still take a long position, but maybe a little bit less so at first and start adding if we continue to run. We'll see what happens. All right. So hand it over to you, Sean. What do we have up first this week?
So first we have Square. Obviously, we've got a couple of fintech names this week, and it's just kind of what I've seen on the charts. And they're both weekly charts. So I'm looking at a bit more of a long-term perspective here. So you can see here, Square, we brought up a few times actually in the last couple of months, actually, I suppose. And we brought up on the daily and kind of breaking out and kind of testing, that kind of thing. But on the weekly here, you can see it's kind of broken above in the last kind of 5 to 6 weeks. And it's just taken a bit of a pull back. And it's bounced off the 20 moving average in terms of the weekly side, and it's just hovering above that kind of trend line, breakout line, as you can see there with the white line coming through the screen. So really, really simply, I want it to kind of basically bounce off of this line, nice tight stop loss, probably where all that volume is down below there. So probably about 68-ish, so it's not too bad. And very simple targets, kind of 85, 90, 100. The ultimate target being obviously 129, right at the top there, the top right-hand corner, because that's the 200 moving average, which is just flatlining for basically years now. So despite of kind of Square's made its move, can it make it even further? We'll soon find out. On top of that, I'm just going to look at the kind of yellow circles I've drawn there. It's just making higher highs as you're kind of going up into these kind of main resistance points as well. So that's another thing to kind of note for that one. I spoke pretty quickly there, so hopefully you can keep up.
I'll tell you.
I'll hand over to UK because you're a Square man.
Well, I think the 50-day moving average is a key level here, for Square, and they do report earnings on 5/2, so about two and a half weeks from here. So I really think that they probably are going to be in this range until we get closer to the earnings, and then we can see some kind of like a movement based on the direction of how the company is for the rest of the year, I guess.
Yeah, I mean, so for me, it's a swing trade. It's not so much a shorter term trade, but you can kind of see the setup moving into further years. Would you agree with that?
Yeah. Also from the option standpoint, right? I think as we get closer to the earning season or the earning date, we are going up from 0.69 to 1.20. So
I'm liking this, Sean. I gotta say, I'm writing all this stuff down. First of all, the fact that you're bringing forward the weekly chart, that's just a much more powerful chart than shorter term durations, and the fact that we've broken above now, retesting with that 50-week moving average right there. That is the 50, right? Is that what you were saying, or is that
the 20 is the blue one? So.
Oh, the 20. So sorry, yeah, that's right. I do it backwards on mine. And so the 20. Either way, you're getting that support there as you're making the higher lows, and then now we're retesting that trend. I mean, this is a great setup. I can't believe how flat that 200-week moving average is. So I'm glad you called that out. Yeah. I was going to ask you what is that line up there, but that is because it's so flat, But yeah, that seems like a great point to drive towards, right? If we do get a breakout here. And given that these are weekly, that could be a really nice longer term trade, right? If we get a nice move here for block.
Block,
Exactly.
yeah.
That's what we're aiming for. Yeah.
Nice. Keep it going.
Absolutely. Let's keep going. So this one is PayPal. So this one's a bit more of a similar setup with a few more details kind of around, entry points, etc. So imagining kind of Square's kind of come down to that level already. PayPal's kind of heading down towards that level, at least in my opinion, of course. So we've got ourselves like a downward channel, of course, and we've kind of broken above that, kind of come up to kind of 66, I think that is, and obviously retreated back down to kind of where we are now, around that $64 mark. What I would like to see here from PayPal is a little bit more of a retreat back down to kind of 62, 63, where those two yellow lines are. And then you can kind of have that confluence of all of the volume profile, the two moving averages, and a retest of the trend line as well. Again, this is a swing trade looking kind of for years for this one. And ultimately, a move back above 66 and to hold that would be my first, positive reaffirmation, or whatever you would call it. But yeah, and then obviously moves up to kind of 77, 88, and hopefully above 100 at some point in the coming years. So a similar sort of setup, but something that's kind of, in motion, whereas Square's kind of at that point of, execution. So yeah, what are your thoughts on this one?
I'll jump in here and say I think I see a head and shoulders pattern, reverse head and shoulders pattern. Right?
I didn't see that. Yeah, nice.
Yeah, and so that's 68 that you're looking to break there. I mean, that's the neckline, and I would love to see it just absolutely run if it break through there. I was one of the skeptics when, I think there's a lot of chatter right back here. So what was this? Was that late last year? Yeah, late last year, and then it sold off a bit, and I was like, yeah, see, I was right. PayPal's going lower, and then boom, here we are, recovered really quickly. So yeah, reverse head and shoulders here could take off.
Awesome.
But also, if you notice, right, at these levels, the volume shelf really is like there is no strength in the volume shelf. Most of the volume is around the 15.8, 59, $60 level. So unless we see some kind of like a catalyst that can move the stock up, I don't know how long we can sustain at these levels.
Earnings? Could be
Yeah,
a catalyst. Yeah.
earning is on 4:30. It's right around the block time frame. Yes, you're right.
Yeah. So that's interesting. But I mean, in terms of trading this one, would you perhaps start a position now, or would you wait for that kind of point where I'm waiting for, kind of 62, 63? Would be your kind of
If I was going to open, I would actually wait for pullback around the 60 level, 61, 62 before.
Fair enough. Yeah.
And let me also take a look at the earning. I'll give you a quick rundown. So I think they do have a couple down revisions. Actually, they have 22 down revisions on the earnings versus only 4 up revisions. And they have actually missed they have not missed the last 4 quarters of earnings. So that gives you some confidence in what they're looking.
Nice.
That's pretty impressive, actually. All right, good stuff. Thanks, Sean.
Yeah, that's it for me. I mean, you can get me on X. I'm a bit quiet at the moment. I'm taking a step back and reviewing my kind of content strategy, etc. But if you're feeling generous, you can follow me over there, and obviously subscribe to me on YouTube, and you can subscribe to my newsletter as well. So yeah, I'll see you over there on those platforms, and I'll hand it over to Nate.
Good stuff. Be sure to give Sean a follow on X, and definitely his YouTube channel is one of my favorites as well. So I will highly recommend both, and the newsletter as well, because they're all 3 there. And I'm going to throw this over to TSM. Now we've got the next chart up here. These are daily candles. So Taiwan Semi, we mentioned, has earnings this week. And it looks interesting here, guys. I mean, we're testing the 20-day, and if it breaks, the 50 days moving average is not too far behind, which also would be a level of support that we've seen. It was prior resistance. It's been tested a couple of times here at 134.75. So we have a retest there with the 50-day moving average being, right at that spot as well. I wouldn't mind seeing it bot back up, get above the volume shelf, and if it does, seeing a continuation higher, trying to retest that high of 158.40, and get back up there and see if we can continue moving higher. See if semiconductors in general can continue the run. But RSI is strong, even though things have pulled back a bit. And overall, I kind of like the way this is allowing us to get in potentially before another move higher. Do you see the opportunity there, Sean?
Absolutely, yeah. I completely agree. I was just looking at the higher highs, higher lows, should I say, kind of leading up
Yeah,
to this kind of move that we're in now. I wouldn't suggest maybe a pullback to that kind of 134. I might see it a bit higher than that, maybe 140, just because of that extra higher low element kind of moving forward.
I'd
That's
be
what I
fine
like to
with
see.
that.
If you come back down to 134, it looks like a bit like a triple bottom, which it's a good thing, but also not something I normally trade on typically. But
Gotcha.
yeah, I like the higher lows generally throughout the chart, and yeah, I'll be looking for that 140 level for sure.
Nice. Kate, you mentioned TSM. You trading this one? You own it?
No, I don't own it. I'm not trading. I'm just watching the earnings season and looking at the put to call ratio. We actually have 0.67. So you have a lot more call options. So you have 201,000 call options versus only 134K put options. So definitely very bullish sentiment on the options chain.
Nice. Bullish options sentiment. I'll have to take a look at those as well. Yeah, so that's TSM. Maybe could help lead additional move higher here, get it started for the semiconductors. I think it's getting more attention these days, this name, right? Getting more headlines. And so we'll see what happens there. Definitely on my radar and reports this week. Next chart I have is American Express, AXP. So talking financials first, and I'm going to spend a little bit of time on this one. XLF, our financials ETF, has been just blasting higher. American Express, AXP, is part of that. And then you can see this trend line here. It's been tested before, and we made a really nice, strong move off of it. And that was right around earnings. So this big candle here is right after earnings, the prior earnings. And then we continue to run up. Now we're getting a little bit of a sell-off, testing the trend line, testing the 50-day average. And we have earnings again this week on Friday. So I'm looking for potentially a repeat of history and get another big move higher. This is one where I actually would consider getting in early this week if we hold the trend line and don't break down. And even if it does break it slightly, but holds this 214.25 level, it wouldn't be a bad spot to get in and look for a recovery and possible earnings boost to get us to new highs. And that would be, targeting getting above 232 basically. So yeah, I like it. We're here just above. Let's see, we're at 218, just above 218. So it'd be a decent move to get above 232. Not a name that I usually trade, but I do like the setup here. Sean, I'm gonna throw it to you first. What are your thoughts?
Just a few one logical thought, and that's just kind of the Amex consumer base tends to be quite rich, I suppose, or
Yeah,
higher
they're
end in terms of
affluent.
that. And they're definitely not stopping spending at the moment, are they? So there's definitely
Right.
hope for Amex and the earnings report. I'm not putting words in people's mouths, of course. Anything could happen. But yeah, I like this chart where it is. I like the kind of trend line where we're sitting on it. I would agree in terms of getting in and starting a smaller position, and obviously adding to it after earnings, depending what happens, or just cutting it. What I would say is a word of caution. So if we were to break this and earnings weren't so good, come back down 2 or 3%, you're already talking about 205. And then you're kind of in no man's land then. And I think we do kind of head towards that gap fill, kind of 190-ish. So that's kind of a big move downwards. So just a bit of devil's advocate there. Probably not what you want to hear, Nate, but you never know. If we have a particular bad earnings, forecast is not so great, then down we go.
That's why the gap is highlighted there, right? I
Yeah.
mean, you have to consider both sides of the trade always. It's funny. I'm glad you're kind of hitting on that. I've been asked that recently by one of my newsletter subscribers, a Trader's Education, shout out. And yeah, they're asking, why are you just pick a direction and commit to it. And I'm like, look, I tell you, I'll lean bullish or bearish, right? But I'm always ready to take either side of the trade, because if the bullish trade breaks down and the bearish trade is very obvious, why not take it, right? If it makes sense,
Yeah.
to your point. If all the things line up and it's an obvious trade that you would take, then go ahead and take it. So, yeah.
I want to make a point on that one, right? I think this is a very interesting point you made. I think what ends up happening is we, as investors or traders, we start loving a stock, right? And then what ends up happening is that puts some kind of a pink vision for us. Like we just love it, and then we just want to marry that stock. That's the problem when you're trading or investing. When you marry a stock, it becomes very difficult when somebody says anything, wrong about it, or, and you cannot do that, because if you then, you're always bullish. Take any stock, for example, like, you take SoFi, Palantir, any, when you have their fans over there, even if it's, going down, they'll come up with all the reasonings why it's going down. But if you're trading, you cannot do that, right? Long-term investing, I understand that you are bullish on the company, you're bullish on the vision. But when you're trading short-term, I don't think you need to be married to a stock.
Yeah, absolutely. There's so many opportunities every week, and we talk about them, right? And they're always different and move from stock to stock. So, yeah, good points. All right, well, that's my 2 charts this week. We'll see. I just noticed the daily volume I left off. That was not intentional. That was just me moving too fast. I'll get those added back in next week.
Yes, just to add to that, what you said. So there is a lot of bearish sentiment on the options change on 419.
Oh, noted. Really?
American Express is 1.49. But also the implied move is about 4.3, 4.4% on the earnings.
That's quite good damage.
Yeah, but it could still, if you really have a bad earning or a bad guidance, you could see, further declines. But but just keep that in mind. But there is a negative sentiment.
Noted. Yeah, I'm glad you brought that up, because I was going to fly right past it. And a 4% move, I agree, Sean. That's pretty big for Amex. So, all right. Well, again, you can find me at Trader Nate here on X. If you're tuned into the live stream, make sure you give it a like and a repost. I appreciate it much. Also live streaming at Wolf Financial, and I write for his newsletter. We post on Sundays, and is a featured writer for his newsletter, and then also Trader's Education, which is my newsletter. So be sure to subscribe to that. And with that, I will hand it over to Kay next. What do we got first, Kay?
Awesome. Thank you, Nate. The first one is Netflix. This is a daily chart. Maybe I should have done a weekly as well on this one. I don't trade this one, but there's a very interesting pattern that the stock was at bottom at 160s back in mid of 2022. Since then, the entire of 2023 entirety has been on an uptrend. So just for the upcoming earnings, which is on Thursday after close, is earning per share is about $4.54. Revenue $9.29 billion for the quarter. We have 20 up revisions and 0 down revisions on it. And generally, the implied move is about 12%. You will notice that since the last earning, we had this massive gap up, which has not been filled. And if you step out and zoom out, you will notice that this stock has been an uptrend since the 2022. So 2 key points to watch for Netflix. One is, of course, how's the subscriber growth did they get? Because this is all about this is what moves the stock. And second would be how is their ad platform performing? Because now if you watch Netflix often, you will start seeing those ads popping up unless you're paying on the higher tier. So I would just continue to watch. We are about $80 away from the all-time high of $700 of Netflix. They were the all-time high at 799 cents. So you could continue to see more gap ups.
Go ahead, Sean. Were you going to say something?
Yeah, so this one for me is a big trade after earnings signal, because literally anything could happen. We've seen it in the past. You mentioned just a second ago, this one moves as well, quite viciously, especially if you get poor numbers, great numbers. It's up kind of 15, 20%, after a few days. But that's also plays into our advantage. So if you have that move initially, you break down the report while it's doing all its moving for the first few hours and the day after. And then you kind of break down the news, you come up with your own kind of thesis and think, that's actually not too bad, or that's actually terrible. Then you kind of trade with that, okay? So you just trade with the news and, hopefully make some money.
Yeah, I got to tell you, I'm always surprised by the volatility in Netflix. Like, I feel like it shouldn't move as much as it does. And I don't know why I don't have any reasoning behind it other than maybe it's just a really big name, right? But I totally agree with everything, all the points you both just made. I would say that you could, trading ahead of earnings is just so risky. I like all the up revisions, but it's a huge move, and you're either going to be making a ton of money, or really, if you're trading options, it's going to go to zero if you're in the wrong direction. So I guess if you do want to take that prior to earnings approach, like, just keep that in mind. You may not get any kind of exit near your stop loss. and because it could all happen before the markets actually open, right? So something to keep in mind there. But if it does, get a nice pop, and then we get some profit taking and some selling off, you might want to consider, look at this chart, right? We got a big pop last time, and then it just continued to power higher as people realize like Netflix is really the leader in this category of live streaming. So definitely one that's on my radar. The volatility again is just
crazy.
You got to be a good trader. You got to be really on point with your trading, right, Kay? Like
it's 86.9% implied volatility right now on this stock.
Yeah, so your options are going to be pretty juicy.
Yeah, but I'm definitely not touching this one.
Are you in it long term? Do you like Netflix?
I do have it for long term position. Yeah.
Yeah, nice. All right, good stuff. We'll keep it going. What do we got next?
Yeah. Next one is your favorite, Nate. You have not talked about this one for a while. They are reporting earnings as well. SLB. My only concern with SLB right now, it was a nice uptrend, but then we had this massive down candle on Friday. And the interesting part about this stock is that if you look at all the other energy stocks like ExxonMobil's and the XLEs, they are all going up higher, Oxy and everybody. SLB, on the other hand, and is just, was barcoding since the $60 and we fell down to the $50 range. And then since it's been, I thought that we will get the benefit while the energy stock is going up, but the massive selling on Friday kind of gives me a little bit of shaky feeling on what's going on this one. Coming up earnings, we have a revenue of 8.7 billion. So see, if you notice, they bring the same amount of money like Netflix. They were 9 point something. This is 8.7. 13 down revisions on the stock as well. And the implied move is not as big as Netflix. It's only 3%, approximately 3%, less than 3 actually. So we won't see that. But I'm a little bit concerned with the Friday's movement on this massive selling.
Yeah, you saw that across all the energy names, right? And that's tied back to the geopolitical news and all the concern there. So I'm wondering, and I'm really glad you brought up SLB because I wanted to make sure we touched on energy. I meant to do it at the top, actually. I'm wondering if this is going to provide us with a buying opportunity for these names, right? It's tough to say because it's just one big red candle. But if this news is absorbed by the markets and you start seeing like that selling subside and these candles start to regain their confidence and start moving higher again, like that initial kind of turning point back higher might be a good entry before we see energy continue to push higher. I don't think energy moving higher is great overall for the markets and definitely not for consumer strength, but just stop talking about the sector and these names. I've been thinking about this all weekend. Is this pullback going to be a buying opportunity for the sector?
Yeah, Sean.
Yeah, and that's the way you have to kind of look at it, isn't it? If you see these downturns in any sort of sector, you think, is this an opportunity? That's what we're here in the markets for. We're here to find opportunities and make hopefully a little bit of money off of them. So yeah, I think that's really well said, Nate. Thank you very much. But nice. Yeah, in terms of the chart, I mean, you're looking at all hopes are kind of pinning on that 50 moving average, aren't they, at the moment?
Yeah,
that's kind of all that needs to be said. But earnings on Friday, like you say, that would be an interesting event. I've voted it down, so looking to see what happens there.
Good call, Sean. But just to jump back in there, the 50-day moving averages across many tickers are being tested, and it's actually making it, for me, I don't know about you guys, a little bit difficult to find really good setups. It's like, well, I don't want to jump anything Monday. I kind of want to see how things play out to start the week for many of the names I'm looking at. So
I think there are three things happening, right? One is you have Jerome Powell speaking, you have earnings getting reported, you have geopolitical going on. Yeah. With everything going on, it's just too many events and too volatile to actually set up those trades unless you are doing a very short-term trade, scalping and even day trading.
Yeah, or just take lighter, smaller positions and maybe don't go so crazy and tighten up your stop losses, right? Take measures along those lines. Seems to make a lot of sense to me. But all right, Kay, this is good stuff. Where do we find you?
Yeah, you can find me on X. I also have a YouTube channel, so you can definitely check it out there. And finally, I actually restarted writing on Substack as well. So if you want some energy comparison, the next article will be the energy comparison between the XLE and the VDE. And we did the tech sector last week. So definitely check it out over there.
Nice. Appreciate that. All right, guys. So we did mention at the top of the hour, get those ticker requests in. If you haven't done it already, go ahead and drop them in the comments and we will start getting through that list. We got a few names already to start off with. Like saw RIVN and Tesla near the top. So we'll get over there. And then, yeah, we'll keep it rolling as long as you guys keep these tickers coming in through the top of the hour. And then I want to mention again that GraniteShares will be joining us and we will be able to get a great insight from Will. He's going to talk about the different ETFs that they offer, long-term investing type ETFs, really interesting stuff. They got a disruptor ETF. It's really interesting names within the holdings list. And then they've got leverage ETFs, so ways to play both the upside and the downside with single ticker ETFs for like names like NVIDIA, AMD, Tesla, Apple. Like it's a really interesting list. So we'll be getting to that at the top of the hour. Make sure you stay tuned. And yeah, I see the names coming in here. I see AGI, VITL, PAS. Got those listed. Got Rivian, Tesla Coin. I think I see APA. Yep. All right. Yep. We'll keep them coming. Let me jump over to those charts. You guys, earnings kicking off and getting heavier. I'm actually kind of excited about. Like, I don't want to get ahead of myself, but I feel like some of these names are going to really give us some opportunities post earnings or even heading into them. So it'll be good, and we'll see what the Qs do with the big tech earnings. Not too long. What is that? A couple weeks away? 2-3 weeks away.
Yeah, not far.
Yeah, it's good. All right, let's see here. I've got clear this stuff out. Just looking all right. You guys see my chart all right? This is SPY, of course. And what should we go with first? Rivian?
Rivian, yeah, let's do that.
Let's do Rivian.
Sean, do you have any thoughts on Rivian before I start talking on it?
I like them long term, very much so. But they're got. I've said it a few times before, actually on these calls. But the next kind of 6 to 9 months or so is going to be very tricky in terms of earnings, in terms of making money. And obviously the new models, etc., not going to be available to 2026. That's another kind of concerning point. But they've got a very good customer base. They've got a very good product. So there's definitely hope there for Rivian as a kind of logical point of view. In terms of the chart, and I've said it before, now we've broken that kind of most recent $10 level. There's no end in sight, really. You're going to have to wait for a bounce, a higher low, and then make a move higher above a moving average in order to kind of even think about getting back in from a trading point of view. But I'm still adding little tiny bits in terms for my long-term portfolios, but nothing too dramatic. Just to keep a nice small percentage in the portfolio to this particular company. But I like them for the long term. Yeah, overall, probably what I should have stuck with.
Yeah, I forget what the news was on last earnings, but you can see this big drop holding nicely, right? And so we had this sell-off, which we had some resistance here for Rivian around 1550, call it 1570, and then a nice big breakout, which ended up selling back off. But you could see it was like trying to hold that prior resistance level here, right? Like, actually, I don't know why I didn't just draw that in. This is trying to hold. And then earnings, this is our last earnings event, and it just could not hang in there. Sold off. You can see the big gap, and now this volume shelf forming. This is not great to see, but this could be a shakeout before a return back up to this level. That's what I'd be watching for, is to see if there's just a quick little, shake of the paper hands, like as they like to say, and then maybe a recovery. If it gets back above this 20-day and then starts to make higher lows, that would be constructive. But yeah, in the short term, it's tough to trade this one for. That's for sure. Okay, what are your thoughts on Rivian?
So I think in general, I think the growth of EVs, right? That it's not growing, and Tesla is kind of driving that as well, right? So the news in general, if you look at all EVs, whether you're looking at Neo, Rivian, Tesla, Polestar, you name it, pretty much all stocks are getting hammered across the board.
Mm-hmm.
And I think until that narrative changes, I think we will continue to see pressure on these stocks. If you're investing, I think the opportunity comes is let see the bounce before you add on it, because we don't know, it could go down from $9 to $5 as well. Who knows?
Right.
So I wouldn't be comfortable adding right now into my long-term position. I would want to see a reversal and then kind of add. so that I can hedge myself.
Yeah, I think those are wise words. I am a fan of Rivian, just like personal anecdote. So I hope they do well. I would really like to own maybe one or two of these bad boys, so I can put my dogs and everything in the back. Doesn't fit in the Tesla, but
Hey, question. We actually got a audience question. Is it possible
yeah.
to make the chart a little bit clearer or bigger? Is it possible we
Yeah.
can zoom in?
Expand it up a bit.
Yeah, I could do that.
You've done it before, I think.
Let's see. What if I do?
Oh, and this definitely looks much better.
Yeah, perfect.
Yeah.
That better?
Yeah, I think definitely.
Okay.
Much better.
Yeah, no problem. This is the thing. I'm on this super wide screen, which is awesome. But yeah, I had to adjust. All right, good. I appreciate the comments. So we make sure we get this easier to see. Let us know if this is better. Yeah, so again, Rivian, I think the sentiment for all three of us here is, pick your spots carefully, but probably waiting for a bit of an upturn and recovery is wiser at the moment, given the sentiment around EVs in general. I think you nailed it, Kay. So let's keep it in this lane and go to Tesla next. And yeah, you can see another trend line that was, it's trying to be broken. We've got earnings coming up. I have gap listed here, so I must have had a gap in here. So I don't know. What do you guys have immediate thoughts? I'll throw it to you first, Sean. I know you study Tesla quite a bit and all the names in this space.
Yeah, I do like this space, I must admit. Nice price action considering the market, etc. The last kind of week or so, and obviously the EVs, like you said, Kay, not doing so well, but Tesla actually not doing too bad in the last kind of 6 or 7 trading days. But generally, I think the earnings coming up is going to be interesting, to say the least. I mean, obviously deliveries have been hammered and lowered and etc. So is that going to impact their bottom line? I think it will. But it just depends how much they can guide for the rest of the year. And they've already kind of lowered those kind of expectations. So it's not looking too good for the future. But from the chart point of view, you can see a nice little breakout of the trend line, perhaps. It's got a little bit more work to do to get through the moving averages. But once it gets through that kind of 50 moving average, I'm seeing at least 200 in sight, definitely. Which is around about 180, I can see. Ish.
Yeah, that 50-day right here at 180 is definitely the target. I would agree. Kay, what are your thoughts on Tesla here? I mean, I was getting a little bit bullish as we started making these higher highs and higher lows, and completely ignored. Just so you guys know, real quick. Sorry, I threw it to you, and then I'm taking it.
No, that's okay.
This bad boy right here, right? I was watching this making higher highs, higher lows, and I did not pay attention to the tightening rising wedge, which when you're in a downtrend like Tesla was in, this is basically a bull trap. It could have broken higher, but it turned in, so you don't know if it's going to be a bull trap or a bear trap, but it was possible, right? We fill the gap and then we reverse lower and we break this lower edge of lower range of the trend or the triangle, and then continue selling. And so I was like really bullish right in here, like, oh, we're going to break above here and continue. And no, this actually made a lot of sense. Hit the trend line, fill the gap, and then reverse is what we got. So all of that to say that I broke my confidence in Tesla. And so I don't feel like I can trade this without bias right now. I'm feeling really bearish on Tesla. So I'm staying away because I feel like I'm just clouded by missing that previously. All right. Having said all of that, what do you think, Kay?
So what if you actually go further down to the most recent trading days? I think 160 level has provided a good support level. We have had 1, 2, 3, 4, 5 bounces from there, and so and then what I'm noticing is, of course, the news came out about I think 8.8 is when they're going to announce the next robotaxi fleet. I think there's a lot more talks about Tesla now from bearish. I think Kathy Woods is also coming out of the woods a little bit and talking a lot more about Tesla, and she actually picked up a lot of stocks with the recent downturn. So I think momentum is building. But in general, the clouds about EV growth has slowed down a lot. And honestly, I am still trading Tesla on a weekly basis, and because I'm selling at the money puts and then basically rolling them off. So that's how I'm taking advantage of it. And generally, when you're doing covered calls, for the last run that we had, we sold covered calls for a week, 2 week out, and then basically just rolling it out or closing the position with a substantial profit. That's how I'm trading, but nothing going big, keeping it very tight range with between $5 or so, $2 to $5.
A question in the chat around Tesla Energy being a positive catalyst. Do you guys have thoughts on that? I'm not as familiar with the Tesla Energy story, but
I know
say,
I know about FSD. I'm hearing that Tesla is slashing the FSD packages by 50%. So I think what is happening is, like, generally the analysts, they will look at these things in a short term, quarter to quarter. But if you think about it, if a lot more people, they get into the FSD, they buy the subscription, and they like what they see, it's a trap, right? Once you get used to a facility or service that you like, then you are going to keep it if it's going to be recurring revenue for Tesla. And I think from a long term standpoint, it's going to be a game changer. But short term, it's okay. I mean, it gives off a vibe that Tesla is not doing good. But I think I'm a long term, I'm bullish. So I'm a little bit biased in my opinion about Tesla. But I think FSD, as it improves, and more people actually sign up for subscription, is actually going to be a big revenue source for the company.
Yeah, I think it's a testament to how Tesla is seen a bit more of an ETF in a way, just because the diversity within the company can really bring in different sources of revenue. So just wanted to touch on that a little bit. So just thinking of Tesla as a bigger company than just an EV company. And obviously energy is going to be a big part of that. FSD is going to be a big part of that. Robo-taxis as well. I mean, I don't think the world needs them yet, but, so be it. It's happening. But yeah, no, Tesla's one for the future for sure.
I would say this, right? A lot of YouTubers, retail YouTubers who finance content creators, who they take Tesla, they make it like robotaxi. Tomorrow, everybody will be flying on a robotaxi. That's not going to happen, right? Because infrastructure, everything has to play accordingly. So Tesla, but if you notice now, you would probably see more Teslas on the road than other EV car companies. Like I do see Hyundais a little bit here and there, but I don't see that many Polestars. I don't see that many Rivians. Rivians are there, but not as much as you can see on Tesla on the East Coast side. I can't comment on other areas, but EV is growing, and I do think, but the problem is a concept gets launched and people just think that they will reach the final stage of that concept in no time. But these things take time. It's a big infrastructure change that's going to happen across the board.
I will say, and there's great comments out here by which is a great handle, by the way, Honest Man Searching for Truth. Thanks for tuning in, and thanks for the questions about Tesla. Yeah, the supercharging network. If this is something that is just, it looks like we're getting widespread adoption, right? Additional source of revenue potential. Like there's just, Tesla's obviously way ahead of everybody and has margins that far surpass everybody in the as far as the competition is concerned directly in the EV space. So the fact that they've got all these other things going on to bring in additional sources of revenue could be hugely positive. It could be distractions, depending on your thoughts on it. But I understand the thesis that this is not just how many EVs are we selling. There's more pieces to the puzzle here. So yeah, interesting spot for Tesla. I haven't been adding to it just yet, but man, I'm going to probably regret it, where it's going to launch off of 160 and I'll be complaining to you guys again.
You did last time. Yeah, you did complain a lot.
Good stuff. All right, let's move it on over to Coinbase, since we're going to talk about names that make me complain a lot. We'll go to Coinbase next. So we mentioned this last week. I think I actually drew this line last week, this trend line, and we did break above it, which is nice. The selling on Friday, right back below the 20-day moving average, is not great, but we're basically consolidating for Coinbase here. And I wouldn't mind seeing kind of this level now. Let's see where we at. Something like 236, 236.50, somewhere in there to hold up, right? And if you can hold that maybe even let it go to 235. But if it holds 235, it's holding the upper half of what I'll call as a range here between 212 and 270. And I would look at that as a positive sign, especially after kind of breaking, and look for it to continue to move higher and retest 270. That's where my head's at initially for Coinbase. What do you think, Sean?
Yeah, no real extra thoughts on this. I mean, looking for a kind of a trend line breakout, because you can kind of see it setting up there. But with everything happening over the weekend, you could easily see that come straight back down below kind of 236-ish. And obviously then that wouldn't be a trend line breakout. It could be a high risk one, of course, so you can get into it like that if you keep a nice large stop loss, but kind of 212, but that's very high risk for me. I'll be staying away from this one.
Yeah, it makes sense. Kay, what do you think?
Similar sentiments. I think if you draw the volume profile, most of the volume is at 228 level. And right now, if we draw Fibonacci from all the way from from 2724 to 325, that's the Fibonacci I'm taking. I think this 243 has had a decent bounce, so that could be a good support level. But if that breaks, my next point would be 228. That's where the majority of the volume shall fit. And if that breaks, then I guess we'll look at the chart when that breaks.
Yeah, it's going to be tough with the news over the weekend. Let me remove this and clean it up real quick. One thing I was going to bear with me, guys, to see if I can draw this really well. I might do it. Oh, where'd it go? What I'm going to point out here, maybe if I can get the drawing on right and not take up too much time, is I think we might have a little bit of a head and shoulders potential setup here.
Yes.
And so we'll have to see how it plays out. But if we do get this selling off here next week, I would be looking for, I guess 236 is that level. And if it sells off below, we could continue to see a drop. That being said, there's different points of support here. 212 and then 187, which that is quite a bit of a drop, right? 187 would be quite a ways. So I think it sets up for a move lower is what I'm getting at here initially. We'll have to see what happens. All right, what's next on Coinbase? After Coinbase, APA. Are you guys familiar with APA?
No, I'm not actually.
No, I've never heard of it. What is it?
APA Corporation.
Let me go take a look here. I get the chart pulled up. Looks like I've looked at this guy before.
It's an energy company, explores and develops, produces natural gas, crude oil, and natural gas liquids.
All right. So natural gas play. You can see this recent run-up. It coincides with, I think, natural gas just overall positive trade. Interesting, we've had this downtrend. Remove some of this old stuff. So energy trade, and in particular, looking at natural gas, looks like we got a bit of a downtrend test and rejection here, and that's the 150-day moving average. Look at how precise it is, you guys, on the 150-day. Woo! Sorry, I like to plug the 150. So anyways, this is interesting. I think the run-up maybe you had, and now we're going to see a continuation lower back, retesting these lows. That would be my guess. And back down to 30. But this will obviously be on natural gas, I think, quite a bit, and how that commodity performs. And if we do get support here, if it recovers above the 20 and can break this trend and get above the 150, that would be really positive, especially because of the 150 here. You might see a pushback towards these highs near 44. But you would want to see a clean break, in my opinion, get above 36 and then start getting interested. What are your thoughts on the technicals on this chart, Sean?
For me, it's the 3250 level to look out for. If you can draw a line across that'd be amazing.
Yeah, absolutely.
Because you can see a little bit of resistance back kind of where your cursor is now. Was that January, February, that kind of time?
Yeah.
A little bit of resistance there, and obviously moving along to kind of 18th of March area. Got a little bit of a kind of breakout trade. So it kind of came up and tested below it, and then make a move higher. Didn't quite work out perfectly, but then it came back down again in end of March, and then obviously made a move higher. So coming back down to that level, if we were to continue selling off, of course, that would be my level of entry. I would keep a fairly tight stop loss, probably somewhere around 31. Just might look at this chart, just because you've got that volume profile, and after that it just kind of drops. So Yeah, this will be a tight trade, but it'll be kind of a recovery kind of bounce trade that I have in mind. And obviously, the one you mentioned, of course, kind of breaking out the trend line. That's another trade setup. But I won't go over that again because you just did that. So yeah,
We do have higher highs and higher lows forming. Should note that. That is
yeah, true,
positive,
true.
right?
Yeah.
It does, but if you notice that it's the same trend as other energy stocks like the SLB that we showed. We had that major selling on Friday, so we would want to watch on the Monday and Tuesday how it plays out, especially with the things that happened throughout the weekend.
Yeah, I like 3250, Sean, as a level to watch for support if we do get additional selling. And maybe that'd be a nice bit of opportunity if it bounces there because the 50-day moving average would be there. And yeah, you're right, Kay, though. We got to pay attention to the news for names like this, all the energy names on Monday.
You do also have support from the 11th of December, that kind of double bottom-ish type thing back on the chart. You can see there. If you drew a line from there, then you're kind of sitting at that support now.
Right. Yeah, that's a good
You're kind
call.
of sitting at that point right now. That's
Yep.
interesting.
Yeah, this is a good chart. I can see why you request to bring this one up. I appreciate that request for sure. Let's see here.
Next is AGI.
AGI. Ooh, I see a couple other names coming in. All right. Alamos Gold. Oh, this must be a gold trade. Look at this move. Gold has been absolutely on fire. You guys trade gold at all? I'm wondering if it is a gold trade. Taking a look.
I actually don't know. No. I remember back in my early days, like testing out the platforms, figuring out what trading was. I used to trade gold on my platform and thinking, oh, well, this is easy, absolutely fine. And then left it for a few days and just kind of dropped, and then that was it. I haven't traded gold since. So maybe I should have another look at it. The naivety,
no, I love it. I'll tell you what, real quick side note. I don't like to invest in gold long term. I like to invest in equities that produce, income and revenues and all that good stuff, like companies. And I've had this such negative bias on investing in gold for the long term that I think it makes it hard for me to trade it in the short term. So, yeah, so that's me and the gold story. Alamos Gold, which is what we're looking at here, AGI, acquisition, exploration, development of precious metals in Canada and Mexico. So let's see, really looking for gold deposits, it looks like. So, yep, gold mining company in Canada and Mexico, very interesting. And the chart looks pretty nice. We had a little bit of consolidation here, and that looks like it's trying to break out and move higher. Big sell-off in gold on Friday. That makes sense. We see this pullback and kind of looking for the Friday low to hold is what I would say, right around 1505 or so. If that can hold, maybe it's going to set up for another leg higher. I wouldn't be surprised, though, if we do get more of a test closer to 1450 back here where this volume is and where we've been bouncing around. Like, that would not surprise me at all either. What do you think about this chart? Who wants to go first? Sean, I'm going to throw it to you again.
Okay, so the high in the 27th of November range, that kind of area. So if we drew a line from there, it's kind of in line with the top line you've drawn at kind of 1508. So that kind of areas, you could actually see a little bit more of a pullback down to the kind of longer term support, if that makes sense. If you get rid of oil, for example.
Yeah.
So you could see that as a bit more of a supportive support, if that makes sense. So that's the line I'll be looking for. Nice, plain and simple. Bit of a breakout trade. I'd like to see a bit more touches around that level. But yeah, it could potentially be that kind of bounce and move it higher.
Get a hold at 1495 here. Yeah, I like that. Okay, what are your thoughts?
I would see 1453 as my support level. So depending upon how the coming days play, if it can hold and it can continue, inching higher, that would be the first. And then if that breaks, then we are looking at the next volume shelf probably will come out 1377 going all the way to the big one would be 1350. So those are the range, I would say. Because at 1350, if you see the volume shelf is massive. That's where I guess most of the buying is happening.
At 1350?
Yeah, that's where I see on the volume shelf.
Gotcha.
But the first level I would target is 1453 as my support level.
Yep, that lines up with roughly what I'm seeing. I got 1452, 1453, and then 1370, which 1350 call it. It's about the same. And if we were to look at that, actually, I kind of like 1350. So we had a couple points where we broke above we're able to hold the level. And then when it broke significantly, there was some selling. Once we got back to it, there's additional consolidation. So that 1350 level is definitely worth noting. And then a big breakout move, right? So, those are good support levels below. I would be looking for first that 1495 that Sean mentioned to hold, and then the retempt to get back to 16. We'll see what happens. It's been quite a move already for sure. And I do know some of the traders I've talked to have taken their profits and most of their profits in gold.
Oh, nice.
Yeah. All right. Well, let's see. What else do we have? Time for one or two more, and then I think we've got Will on the weights, and we'll get him pulled in, and we'll get to some GraniteShares ETFs.
Let's do AMD.
All right, let's drop AMD in here.
I'd like you to have a look at the weekly because I want to see what your thoughts are. I looked at this earlier and I thought, it's not bad.
Whew.
Just sitting right at the 20-moving average.
It really is. This is a weekly chart here. This candle right here is not my favorite.
No.
You can see that that's at a reversal. So this is a key spot, I would say. I'm with you. We're right at the 20, and then you've had some support right here about 164. We're a little bit below it, but that's okay. We've gotten below it before, right? So yeah, this is an interesting spot for support. I agree with you. Okay, what are your thoughts on AMD these days?
I'm just waiting for the AMD to fall further so I can get back into trading it.
You said 163.
yeah, exactly.
Weeks ago.
I did exactly, and so this is also the level for the fib that we have drawn,
Okay.
163.28. So if that breaks, then we actually have a little weakness in the volume shelf, and then the volume shelf really comes around the 148. I would really want to see how it plays out in a couple of days before I actually decide on an AMD trade. But the 147 to 163 is what I would be comfortable getting back into AMD.
Nice. All right. Well, I'm kind of myself. I'll just add my quick comments here. Is I would like to see a big bounce at this level with AMD. I'm a little bit hesitant. The daily chart is showing a bit of weakness, but you can see the support levels are all here lining up from the daily and the weekly. So this is a spot, but be below the 50-day with the 20-day moving average crossing below. Not my favorite, especially with this big wick here at the top. Feels like maybe AMD got ahead of itself a little, and I would like to see it consolidate more so than pulling back any further. So 163, I like that you're holding K accountable there, Sean.
I'll do my best.
Nice. All right. Well, I think that's good for these charts this week. I would love to get to more. I appreciate you guys dropping those requests. I see there's more that we didn't get to, but I want to make sure we have some time to jump over to talk to Will. Before we do, let's just do our usual sentiment wrap up for the week. And for myself, like I mentioned, you guys got earnings coming up. We've got Jay Powell, like you mentioned, Sean talking, just a lot going on, plus the geopolitical news coming out of the weekend. I think I'm going to be a little bit light in my positions if I trade on Monday, and we'll be kind of easing into the week, but definitely ready to pounce on any kind of buy the dip opportunities if we see some support showing up. That's just where my head's at, taking it easy, but also ready to kind of pounce if we get the opportunities. What do you think, Sean? You in the same boat, or do you have different sentiment?
Absolutely. I'm much of the same sort of boat. I'm kind of taking a step back. I'm just reading the charts as well, especially on the kind of bigger time frames. Like I brought up 2 weekly charts today for a reason, just because we're getting that bit of a pullback, bit of a kind of downturn in the markets overall. Then it's time to look at those stocks that you know and you love to kind of see where the entries you are, where you can find your good entries to kind of go longer in the future. So Tesla, AMD, we just brought up just a second ago. So that kind of thought process for me personally. Smaller positions, definitely very volatile at the moment, especially with the geopolitical news you just mentioned. So yeah, just kind of taking it easy, to be honest with you.
Makes sense to me. Kay, in the same boat?
Same sentiments, and basically just manage the existing positions. And as you said, if opportunity presents, probably get into it, but keep a smaller position.
Perfect. All right, guys. Well, let's get Will in here. I'm going to bring him in cold, so we might surprise him, but we'll get him in rolling right away and jump into the GraniteShares ETF. Let's get into it. I'm looking forward to it. All right. Hey, Will, do you hear us okay? Got us loud and clear?
I can hear you fine. Can you hear me?
We got you. glad
All
you could
right.
join us.
Great.
Thanks so much for being able to take some time today and talk about GraniteShares. And so again, we've got Will Rhind with us with GraniteShares. These are ETFs that I am getting more familiar with myself and really excited about, quite frankly. There's two different types I'd love to get into with you, Will. Before we do, just a quick introduction here. These are my co-hosts, Sean and Kay. And so we'll be all asking you questions, as we go. But Will, if you don't mind, give us a quick kind of overview of GraniteShares and what we can expect with them.
Sure. No, thank you. And thank you for having me on this afternoon. Great to talk to you guys and everybody else. So we're a ETF issuer. So that means that we're an asset manager that just specializes in building, launching and managing ETFs or exchange traded funds. So we have a range of funds here in the US, mostly traded on the NASDAQ. And then in Europe as well, we're active in the UK market, the Italian market, French market, and in Germany as well. So we like to think that we build ETFs for high conviction investors. And so that means that the types of ETFs you're going to find from us are typically more racy than your kind of grandmother's generic, S&P 500 ETF or fixed income ETF. So we have leveraged ETFs on single stocks, a lot of the stocks that you guys know and love. And that's here in the US and in Europe. So the company, we manage about 4.2 billion, something like that. And yeah, these products have become very, very popular and are sort of popular really around the world or anywhere that people can access a stock exchange through a trading app these days.
It's good stuff. And I gotta tell you, the diversity of the types of offerings you have, right, with the basket of holdings and also the single stock ETFs and being able to take position either way, like that's really, we're all traders here. We've got over 3,000 people tuned in our audience, all traders as well. And I think, we talk both long-term investing and short-term. And so these ETFs really kind of get our interest quite a bit. So I'm glad you could be on to kind of talk through some of these with us. And by the way, those of you in the audience, whether you're tuned in on the Trading Triangle or Wolf Financial on YouTube or on X live stream, be sure to drop in any questions you have as traders. Some of these ETFs no doubt are going to get your interest and you want to look into these. So let's start though with some of the basket ETFs. One in particular that I like that has really got my interest, Will, is DRUP. You're a disruptor in ETF with the innovative stocks in there. What I like about it is it's not, it's like very complementary in my opinion to something like the QQQs, which is something I have shares of and want to add to more tech positions, more growth positions, but not just keep piling in the same name. So yeah, if you don't mind kind of breaking down that ETF a little bit for us, I'd love to hear about it.
Yeah, sure. Thanks, Nate. So the idea with DRUP or DRUP, as it's called, so nice. Shorthand for disruptors. And that's the top 50 most disruptive stocks in the US market selected by NASDAQ. So we work with NASDAQ to create the methodology around the index for this particular strategy. So this is not a leveraged strategy. It's just a 50 stock portfolio that aims to provide exposure to the top disruptive stocks. So in terms of why disruption in particular, the thesis around this is that disruption is not a known factor, like, for example, value's a factor or growth's a factor or momentum's a factor, but yet disruption is one of the most, probably the strongest or most prevalent forward-facing risks that we all face as investors, because we can't sort of bottle it and have it as a factor sitting alongside our traditional ones. The idea is, can we try and create a factor for disruption, and can we try and invest in this phenomenon through his portfolio? So to do that, we have 6 factors that end up becoming the strategy. So we score every company and we weight them according to these 6 fundamental factors. And then the top 50 stocks get selected into the portfolio. So when you have, for example, one of the factors is the value of a company's patent portfolio. And so you may think, okay, well, what's the sort of significance of that? Well, it turns out that disruptive companies have not just large patent portfolios, but they have valuable patent portfolios. And so we want to measure and ascribe value to those patent portfolios, because typically if you have a large and valuable patent portfolio, that might mean that you have a significant moat in a particular sector or an industry, or a quasi-monopoly type position. And those are the businesses that we like to invest in. So it turns out that NASDAQ owns a patent valuation company. And so that's one of the companies that we use to value stocks. It's a very unique process. And then because we're investing in innovation, we want companies that are growing quickly, but yet we don't want companies that are growing at all costs. So the big lesson, obviously, from the last few years with the likes of Cathie Wood's ARK, et cetera, was, you could get, fantastic returns, in an environment where we had, tons of liquidity in the market and zero interest rates or negative real rates. And you could invest in companies that were growing like crazy, but they were never making a profit, or maybe never would hope to make a profit. And so we want to make sure that we don't invest in those companies, because the lesson was, when the market repriced itself, when the Federal Reserve started raising interest rate, those companies all got smoked. And so we want something that's sustainable, something that provides disruption, provides innovation for the long run. So there's a hint of quality in there as well. So that's why, when you look at some of the holdings that we have, that when we talk about the factors that we value and that we use, you'll see things like profitability in there, because we want to make sure that, yes, the company is super disruptive, it's got a valuable patent portfolio, it has the growth that we're looking for, but it's also profitable, and there's a quality tilt in that as well.
I love it. This is great stuff. And that ETF in particular caught my attention. And the holdings, like just taking a look at, you've got names that are familiar, of course, but then you start getting into, it's a nice mix, right? I see names, names we talk about all the time: Salesforce, Meta, Adobe, right? And then of course the Microsofts and Alphabets mix in there. I mean, it's right in the lane of what we talk about, is both long-term and short-term trading.
And I think the kind of the cool thing about it is that a lot of these funds, what you'll see is it's just another Magnificent Seven fund in disguise. And the beauty about this is that actually, we don't have NVIDIA. So the performance on the fund has been amazing. And, you put that into context where we have not owned, a stock that is more than doubled in market cap over the last, 12 to 15 months, that in of itself is a phenomenon. So, there's some very specific reasons for that. But ultimately, I think providing that portfolio, which, as you said, Nate, at the beginning, works as a complement. But for any investor in technology, any investor in innovation more broadly, this can be a valuable, addition to the portfolio.
So I have a question for Will, if that's okay, Nate.
Yeah, jump in, Kay.
Hi, Will. So my question for you is, what should retail investors consider when selecting a GraniteShare ETF that matches their investing goals? So what would be a couple key points that you would want to suggest that we should look into? Because we have a lot of options on the GraniteShares platform. And so what should be the key points that we should consider as a retail investor?
I think it depends on, it all depends on your level of sophistication, right? So I would say we have funds which, I heard you guys talking about gold, for example, before I jumped on. We have a gold ETF, which is just literally physical bars of gold in a vault. So it just tracks the gold price up and down. Very straightforward, very simple strategy, just provides exposure to gold. So that's a very simple way for people to get that exposure without claiming the risk. Obviously, as the gold price goes down, but beyond that, it's a very straightforward strategy. And so something like that would be probably the easiest, strategy that we do, most simplest to understand. Then you've got something like the DRUP that we just talked about, which is ultimately a US large cap equity portfolio. So you would expect, all things being equal, that by investing in that, the performance is going to be in or around US large cap equities, so the S&P or NASDAQ. So again, depending on your sort of investment horizon, that's also something to consider for either a longer term investor or a short term. And I think the only sort of distinction I'd make is when we talk about the leverage products that we have, then by definition, that's something that people just need to understand in terms of how the leverage works. And I think level of sophistication, clearly you need to understand the risks involved in using leverage. And so typically those are short-term strategies or more short-term than just putting DRUP in your portfolio and forgetting about it. So there are sort of different things to think about, perhaps, but I would say maybe the easiest way to think about it is split our offering into leveraged funds and unleveraged. Unleveraged ones are going to work very similar to any other fund pretty much you own, which is you can typically buy and hold these forever. The leveraged funds I think are really designed more for short term, and people should understand how they work and obviously how to incorporate that in the portfolio.
Yeah, I think leverage for me is a massive appeal, especially for GraniteShares. Hi, Will. Sorry, I'm going to say hello.
Hi.
For me personally, I've actually traded your shares on my broker. I use trading 2-on-2 over in the UK. Just thank you for the opportunity to obviously trade with your shares. It's a real pleasure. It can be risky at times, but obviously for me, in terms of leverage, I tend to do it on a kind of daily basis, sometimes a bit more of a swing traded basis, depending on the asset, of course. So I just want to add that kind of knowledge and kind of user experience, at least from my side. So yeah, cheers, Bill.
Thank you.
Yeah, that's a great segue, you guys, because and Will, you really outlined it perfectly. There's the two kind of products you have, the leverage and non-leverage, and and we were talking about the non-leverage. I think getting into the leverage, especially for all the traders that we know tune in, and like Shaun was saying, we talk about these daily trades, swing trades, and we get into options, right? We trade options as well, but then not everybody has access to trading the options and so on. And then also the level of sophistication needed to trade options, wisely is also, there's a bit of a learning curve there. And so with leverage ETFs and these single stock leverage ETFs that you offer, for me, it does actually bring some simplicity to being able to trade with some leverage without getting in over your skis, I guess you could say. So, but at the same time, there's things to be aware of, right? Like there's definitely a way to utilize these leverage ETFs. So I would love to hear a little bit from you as far as how you guys really got into, because we've got leverage ETFs for NVIDIA, AMD, Apple, Tesla. These names are great, right? We highly liquid, so traded quite a bit, and you've got them both directions, right? We're at a spot now where maybe people are looking to take short positions, and you've got those opportunities. So yeah, if you can help us get a little bit more knowledgeable about these ETFs, that'd be great.
Yeah, sure. So we offer quite a wide range. In the US, a narrower range because it's a little bit newer than the ones in Europe. So Shaun might know that in Europe, there's a lot more choice. In terms, we've got over 100 products of anything from UK names to US names to Italian names, etc. So a lot more variety than we do here in the US, which is typically just the largest stocks. Also, the leverage factor is different. So typically in Europe, we do 3x because that's what we're allowed to do in Europe. Here, we can only do maximum of 2x. So that's also a differentiation. But yeah, I mean, the idea here is to try and offer the stocks that people love, the stocks that people want to trade, both the long term, the short term, and really curate that portfolio for people. And it's a combination of not just kind of stocks that are highly traded, but also typically we like ones where you're providing a solution as well to something that doesn't exist. So, for example, when we launched CONL, which is or CONL, which is the ticker, which is our 2x Coinbase ETF, that here in the US at the time, there was no spot Bitcoin ETFs. There was no way for people to trade, Bitcoin directly with an ETF, let alone a leveraged version of that. So it was kind of a nice way to provide a proxy to that market and give people exposure to the volatility of the crypto price, without having to directly participate in it. And then you have, stocks like Alibaba, where it's the ADR, the US traded ADR. So again, provides exposure to China and Chinese tech. And then you have clearly the major names that everybody knows. and loves with NVIDIA, or NVDL, which is that's actually the biggest now levered single stock ETF in the world. So just been a monster with all the crazy stuff happening with AI.
Yeah, that's incredible to see that, and congratulations, by the way. I mean, obviously there's a lot of interest, right? And I can tell, but just by our audience count, by the way, which continues to tick up as we talk. So yeah, these ETFs, I think, are just providing more opportunity for traders to get involved with these names, and then that added leverage. Just from a trading standpoint, I mean, we're always looking for ways to find a little bit of leverage, a little bit of advantage to take our gains a little bit higher. And these are answering them. I think that's exactly what you said. You saw that there was a need and kind of answering the mail there. Shaun, if you don't mind, throw it back to you. What names did you, if you don't mind me getting into a little bit, you said you trade some of these tickers, and do you use it for both upside and short side? If you don't mind, give us a little insight on how you use the GraniteShares ETFs.
So I go obviously alongside on kind of 3x leverage. Yeah, you know me. And I kind of pair it to the actual chart of the actual stock, for example. So let's take Coinbase as an example, as you mentioned there, Will. So if it's hitting a certain support line, I would then actually enter the 3x as a consequence. So obviously then I would basically triple my gains if it went up. But of course you triple your losses if it comes down. So that's kind of how I look at it, kind of really fundamentally, kind of looking at the normal chart, and obviously playing it along with the leverage ETF. So yeah,
nice. So you're watching both the underlying as well as the leverage charts, and kind of paying attention accordingly. And then it gives you. So Shaun, we talk about this. You're trading shares, and so this gives you an opportunity to, if you have additional confidence in the trade, I'll say, to really get in with more than just adding to your share position necessarily, but being able to take advantage of these types of ETFs.
Yeah, of course. And I think for me, for my actual day trading account, it's actually 5x leverage in terms of the way it works over here in the UK. So it gives me a little bit more of a less risk in a way. So it's kind of basically taking that element of risk away. I know it's a 3x and the risk is there, but for me, it's actually taking a step back as well sometimes. So I kind of, it's a case by case basis, of course, and obviously different stocks. But yeah, it's a really interesting kind of way to trade. Yeah.
Yeah, some flexibility there. Kay, did you have any questions for Will? Are you going to utilize these ETFs if you haven't already? Because I know we talk options quite a bit.
Yeah, no, definitely. So, Will, looking at the leverage ETF list, I see one of the stocks from the Magnificent Seven is missing, Netflix. Is there a reason why you did not put that on the list here?
Yes, it's funny. We had it in Europe, and I guess Netflix went through. So we launched our business end of 2019. So Netflix sort of went through that difficult period where people were saying, "Oh, it's no longer a FANG stock," and obviously that was the sort of the acronym of the time. And it went through a bit of a challenging time, and probably went out of favor a little bit with a bunch of investors. So we never really saw much traction in the name, to be honest with you. So that definitely would have influenced our thinking in terms of bringing that here. And of course, as other streamers have kind of fallen away, and really it seems like now in streaming there's just going to be two names, and that's Netflix and Disney, and really everybody else just can't afford to stay there. And so Netflix clearly has been on a tear kind of late, and I think that will sustain itself. So it's definitely something we can look at, but it was probably unfortunately influenced by that sort of negative patch when everybody was trying to jump into the streaming market a few years ago.
Yeah, interesting take on that. Definitely, I think Netflix in the last, 2021 to 2022 was like the bottom for Netflix. And then since then, they have been on a tear since the subscriber growth really increased. And then on top of it, when they launched their, what is that called? The ad platform where, basically...
The freemium. Is it freemium you call it? Yeah.
Freemium, yeah, exactly. That's the word. So I really think that, overall, we are seeing a really... a nice trend on Netflix. Is almost like close to its all-time high with 700 coming along very soon. Hopefully, we'll see. But that's interesting to see here.
Yeah.
So Will,
maybe if I launch it, it'll be the all-time high, which is never a good omen when you launch a fund and stocks at an all-time high.
That I imagine is a tricky spot. Yeah, I was gonna mention or ask, I guess, because we're talking about different ETFs that might be coming down the line. both, how do you select, and you kind of touched on this, I think, but maybe get into how do you select the different ETFs, because it's obviously it's not like something you just go and throw up new ETFs every day and there's not big costs involved, right? And then as far as if you have to actually move away from them, is there factors that cause you to shut them down? And is there anything in the pipeline that we should be looking forward to that you can talk about? I realize you might not be able to discuss.
Yeah, and I mean, in terms of how we select it, it's more of an art than a science. We try and match, what we think is demand in the market, for names that we want to bring, and that's the sort of, I suppose, the philosophical point where clearly you want to bring names that people love and you think there'll be a lot of traction in. But then there's a practical point, which is because we're adding leverage, we have to get that leverage or source that leverage from typically large investment banks and broker dealers. There's a practical side as well, which is some of the more crazy stocks going to be much difficult or more difficult to finance. And so therefore it might be the case that we know there'd be a ton of demand for a particular name, but from a practical perspective, we just can't get the leverage on it or the short on it because it's impossible to borrow the stock without the cost just being crazy. Right. So there are those kind of considerations, and that's why we try and bring stocks that will be large enough to be sustainable, but yet carry that appeal, and/or, like I said, that provide a solution to something that where there's an investor problem with market access or something in the market. So it is a little bit of an art, to be honest with you. And then obviously we get feedback. We get a lot of people that just come to us directly and say, "Can you do this? Can you do that?" And clearly, from a sort of crowdsourcing, if you want to call it that, non-intentional crowdsourcing, that you get a feel for what people want and what names are interesting, and then we can look at those and try and bring those out. So we have a bunch of names that we would like to do, and like I said, maybe some won't surprise anybody probably on this call, because there'll be more in the maybe it's the semiconductor type area, in the tech sort of arena more broadly, but then others aren't. And I think it'd be nice to bring out some single stocks at least that are on more traditional companies like energy companies or airlines, etc., where there's still a lot of interest, but it's not AI.
Yeah, that is interesting. You get our attention with the energy names. We talk energy quite a bit, and I like that you're looking. It makes a lot of sense that a lot of these names are around tech and AI, so to speak. But the fact that you're able to kind of keep your eyes up and looking for opportunities across different spaces. What I heard is you're looking for basically where are there needs for solutions, and then where's the actual recognition, like, hey, yeah, we want this solution. That's where the demand comes in,
and
right?
Then, and candidly, as you guys may or may not know, but the only way we make money is on the management fees. So we charge like a small percentage of the assets, just like in any fund. So we don't make money on the trading of those shares in the market. We don't make money, on commissions or anything like that. It's purely just every dollar that's invested in the fund. We make a small percentage of that. So for us, it's got to be, we got to think about names that can add assets that would be really popular. So like NVIDIA, for example, has been super popular and it's become, really the global stock, I think, for AI. And then the reverse side of that, Nate, is in terms of why or how we'd consider shutting a fund down. It's just the economics of it. So clearly each fund is like its own profit center or its own P&L. So if we were launching or if we have a fund that is not at break even, then that's something we have to consider in terms of shutting it down. And a lot of that is just dictated by the market. So the market very clearly will show you after a good period of time. So it might be 12 months, for example, if there's no demand in a particular name and it's not, anything sort of fundamentally to do with the name. In other words, there hasn't been just something horrendous happening with that company that's just had 12 months of sheer pain that is abnormal, and we think that that's likely to end. That if there's an economic decision, we say, look, we tried it, nobody was interested in the name, we'll close the fund down and offer something else that people will want.
Yeah, that seems pretty straightforward. I'm gonna be honest. I kind of like the very simplistic kind of approach, if that makes sense, right? Like, you don't have to. You're not talking about commissions. You're not talking about load fees or anything like you get with mutual funds, for example. And having worked at these funds, like, I'm very familiar with sensitivity around how that impacts performance, right? And so people might say, well, how are you aligned with wanting to get good performance and pick the right? Well, if you have popularity in your funds, meaning that there's demand, then that just naturally works for you because all you're taking is that small fee. And so I appreciate
you're perfectly aligned because you're on the same side of the table as
Right.
the customer. So if our assets go up, that means performance goes up, and therefore we win and the customer wins.
Right.
And similarly, at the other side, if performance goes down, the price goes down, assets go down, the customer loses and we lose. So that's the sort of perfect alignment with ETFs that you have.
Yeah, it's fantastic. So if you guys haven't checked it out already, of course, do your own due diligence. Always recommend doing your own research. But GraniteShares ETFs, right? I'm gonna list a couple of these leveraged single stocks we've got. We got Apple long, and is there Apple short? I didn't see the Apple short, but definitely see Apple long.
Not short. Yeah,
Okay.
We probably should have had one given the performance this year, but that's probably a story for another day. But yeah, we typically do long because, again, to Sean made a quick point about it, that I don't know, it's just a sort of psychology of the investor, but I think more people just prefer to go long, even if a name is struggling. So it's interesting because what we see is more buying activity on, let's say, Nvidia on a down day than on an up day, which might seem counterintuitive. But if you have a big downdraft and NVDL might be down anything from 5 to 10% in a day, we are more likely to see more buying that day than, say, if NVDL goes up 5 to 10% in a day. So I think just counterintuitively or intuitively, depending on which way you're biased, people like to buy a stock still in the hopes that it goes up. And then you'll see that where we have a short, we typically have a short on the names which do attract just such a huge amount of volume that there is room, sort of makes it financially viable for us to offer a short. So Tesla's always been that name. And again, despite the fact that this year would have been perfect, we haven't really seen much traction in our short Tesla, which is unusual because normally you do see a lot of volume and a lot of assets in the short. And then Nvidia, we have one where, again, we've seen huge amounts of trading volume, but not that much assets. But that's largely because clearly the long of Nvidia has performed so well that people,
sure,
on the short side, the performance has been terrible. And then on AMD, we have a short as well. So again, it was the idea that there was enough volume, in that name on the long and the short side. So we'll see. I mean, it's something that, again, we look at case by case, but overwhelmingly in our experience, the market is naturally long. And, people will favor, if you have a long and a short, will favor buying the dip on the long versus taking an outright sort of short position, even if it's just for hedging.
So I have one question for Will here. Will, from your perspective, are you also looking at the fintech space or the SaaS space? That there are a couple names that are very popular among retail investors. So are you also your firm is looking at building those leverage ETFs for those names?
Yeah, I mean, if you're talking about anything specifically, let me know. But we look at any name really within reason. And if it's a US stock, it's very easy for us to bring that to market. And again, the practical consideration is just, in terms of the financing, to make sure the stock's not too crazy from a volatility perspective, that we can provide the leverage on it.
Like a couple names that just really comes off the mind. Like one is Palantir, which is very a big favorite of retail investors. Yeah. You have SoFi, you have Square, a Block, as you say. So those are a couple stocks that are also traded pretty well on the option side. And there's generally a lot of volume behind it.
Yeah. Palantir we have. So that's something that I'd like to bring out fairly soon. And the others, I don't know if I have those currently on the registration. I don't think so, but have a look. I know we have Block in Europe, and I think it's been okay, but it's kind of been eclipsed by the MicroStrategy and Coinbase as a sort of a crypto proxy. So it's just crazy amounts of trading in those names. But yeah,
I think
definitely something we're looking at.
Sean will be very happy hearing Palantir leverage ETF coming out soon.
Yeah, it's here in Europe, so I've got it on my broker. I've touched it a few times. Let's be honest.
Yeah,
nice.
Some of the performances, obviously, I mean, as you guys know, has been amazing in that stock.
Very much so.
You know, going through the list of these leverage ETF names, you know, you're talking about people lean long, typically speaking, and I mean, we're bullish until we're not. It's kind of like the way you would kind of frame the trading triangle here. And you know, just looking at the assets under management, you can see like you have NVDL, the 2x leverage NVIDIA long, and then you have NVD if you want to go short. And the assets under management are, you know, dramatically different, right? Definitely skewed to the long side. Just a couple of other names, you know, Tesla you mentioned. If you want to go short, it's TSDD. But the long positions, you know, 1.25x long and 2x long, TSL and TSLR respectively, again, dwarfing the assets in the short. So I kind of like to see that. I wasn't paying attention to those numbers, but that's great to see.
And even TSLR, you make a good point, because that has been disappointing from an asset perspective, and that's a 2x Tesla. And despite clearly the bad performance of Tesla this year, overall, I'm kind of curious, because I would have expected a lot more. Typically, we see a lot more interest just in that stock. So I don't know whether this was the year that the Tesla fans kind of pivoted to AI and crypto, or whether it was you know, something else. But I've been curious. That's been one of the things I've been sort of puzzling at this year, that why we haven't seen more assets in TSLR, which is a 2x Tesla ETF.
Yeah, this is good stuff. All of these tickers are fascinating, and I will say too, we're talking about these leveraged single stock ETFs, and you know, we didn't even touch on BABA. You have BABA and Amazon in here, BABX and AMZZ, but then from a longer term perspective, there's some really interesting things. I'm just going to circle it back to, you mentioned the gold, GraniteShares Gold Trust. That's BAR. In the commodity space, you've got a couple. You've got COMB. For the broad commodities. And then what was I looking at just a second?
Platinum?
Oh yeah, platinum. Yeah, PLTM. Yeah. So I think that's another, you know, great way to diversify your long-term holdings if you're interested in any of those. But yeah, the commodity space is interesting. Is there a reason why you're
especially now, right?
Yeah, absolutely.
Yeah, I mean, I've been involved in commodity markets for a long time, and you know, it's always going to be kind of a key part of our business. But I mean, commodities, as everybody knows, are quite cyclical, and you know, fell out of favor certainly over the last sort of 12 to 15 months. But you know, oil's quietly been climbing the wall of worry, so to speak, and you know, we briefly went back to $90 a barrel, you know, in Brent. And of course, just this weekend, you have another massive geopolitical situation and potential, you know, escalation of the Middle East sort of conflict. Which, although gold took a bit of a dip on Friday, this could be a good week for gold and for commodity prices, you know, more broadly, you know, when we open up on Monday. So I think commodity prices, again, that's really one of the things which has been making the Fed inflation numbers feel a little hotter, or run a little hotter than expected. A lot of that is due to rising commodity prices, which I think have caught some people by surprise. So it's something that, again, is worth paying attention to, particularly I think in situations like this.
Yeah, couldn't agree more. And these ETFs are definitely getting my attention. So you guys, Kay, did you have any additional questions for Will?
No, I don't, but I'm excited to actually look into the leverage ETF for my trading moving forward.
You know, we've had Will on a couple of spaces on Will Financial, and every single one of those has been the same kind of sentiments. Like, I'm really excited about looking into these. Like, I didn't realize all of these leverage ETFs are on the table. So I'm glad we're able to take some time to talk about it. And Will, you making yourself available to, you know, answer questions and kind of get into the nitty gritty is huge in my mind. Like, you don't get that opportunity with every investment vehicle that you're looking at. So I do appreciate that. Sean, did you have questions? Any other additional questions? You're just going to go
No
back
questions.
to trading these.
No,
these
I'm looking forward to. I'm looking forward to very much DRUP.
Nice.
That really excites me. I'm looking forward to what you've got coming in the future along those kind of lines as well. So, yeah, no, thank you very much.
Yeah, Will, is there any additional things that we didn't touch on about GraniteShares ETFs that we should hit on? By the way, I think we set a record for our audience this week, so I appreciate everybody tuning in. There's definitely a lot of interest there, so good stuff. But yeah, what else would you like to add before we wrap up here today?
I think, look, I mean, the range of products we have, I mean, hopefully we're trying to curate, something for everybody. So like I said, whether you're a long-term buy and hold, or whether you're a short-term trader, we have something for everybody. But I think the way to think about what we do and how we differentiate from the Vanguards and the BlackRocks and things of the world is we have to be different, and we have to create products that are just not your kind of generic run-of-the-mill products. So clearly, things that we offer are going to be different, or ideally are going to be unique, meaning you can only buy them from us. And so we're a product first company, which means that we have to come up with these ideas that no one else has thought of, and try and get new segments of the market, or open up new segments of the market. And so whether we're doing longer term investing through the likes of DRUP, HIPS is another one, which again, I don't know how many of the audience like income, but we have an income ETF which pays a fixed cash distribution every month. And so that's about a 10-11% per annum yielder. And again, these are all sort of very unique strategies that have been designed for investors, but you can only get from us. So have a look at the materials. Anyone got any questions? Obviously, come directly to us with whatever questions that you have, whether it's following us on the LinkedIns, on the Twitters, etc., or just coming to us direct through the website with a chat function. People can ask questions. So we're very approachable, and obviously, our goal is that everybody has a good experience with the product, and whether you're into commodities or income or tech stocks, whatever, there's hopefully something for everybody.
That's good stuff. Really well said, and I appreciate again your time, Will. And if you haven't had a chance to check out GraniteShares, definitely take a look at the website. They have multiple ETFs. We talked about the leverage side of the house. We talked about the longer term. You mentioned HIPS at the end, which I'm glad you did for the income. There's the commodities. There's a lot of different ways you can really kind of accent your portfolio, in my opinion. And so, of course, do your own due diligence. As we always say, we're not, financial advisors here on the Trading Triangle, but we do like to get people on like Will to talk about these, these different vehicles to conduct our trading and long-term investing. And so, again, Will, thanks again, and appreciate everything GraniteShares is doing. Hopefully, we have you on again another time here in the future.
Yeah, that'd be great. Thanks,
Awesome.
Nate, Sean, Kay. Good to see you.
Thank you, Will. It was
Thank you very much.
Thanks for taking time on a Sunday.
Yeah, absolutely. And everybody, thanks for tuning in to the Trading Triangle and to Wolf Financial. Again, if you haven't already, subscribe so you can get some more great info. We get more conversations with Will in the future. And have a great trading week out there, everybody. Thanks again.
Take care.